Hey, good morning, everyone, and welcome to today's monthly webinar. So we're into July 2024. So Aaron, where's the first 6 months of the year gone?
Yeah, you're not wrong. Absolutely.
So as per normal, if you haven't attended today, we ask any questions you enter there into the Q&A panel. Obviously, all attendees will be on mute, so you can't use microphones anyway. We've got four or five BGL team members who are online who can answer a bulk of the questions whilst we conduct the session, and we'll come back to the end to answer any questions. A copy of the slides will be sent to all attendees usually at some stage tomorrow, as well as a link to the recording. So if you do miss any parts of today or would like to send a copy of the recording to any colleagues, you will receive a link to that as well. On BGL's YouTube channel, you will find also all the previous recordings as well. So if you don't get enough of Aaron and myself today, you can see more there on YouTube. Cool. As per normal, I'll conduct our BGL update. So for anyone who hasn't met before, my name is Jeevan Toki, and I'm obviously the head of Simple Fund 360. Joining me as per normal is Aaron Dunn, CEO and co-founder of Smart SMSF. So welcome, Aaron.
Thank you, Jeevan. Yeah, and happy new financial year to everyone. You're back from holidays or you're on holidays, maybe sipping a Mai Tai or something and enjoying the updates from us. Going to give you a bit of an update around naturally what's happened to the end of the financial year and talk about that both in the context from the legislative front, but also what changes we've had to make throughout our documents as well.
Excellent. Yeah, I think for some parents there, it's probably getting to the end of school holidays. So looking forward to the kids getting back. Cool. So, and then at the end, like where Aaron and I normally stay online and answer any questions you do have. So feel free to shoot those through at any stage during the presentation. Okay, we'll jump into the BGL update straight away. So covering the last two updates, a little bit of typo there. But as expected, the last two updates have been focused around a lot on sort of tax changes and updates. So I'll cover those. If you are watching this webinar live, our next update is actually going out this afternoon. So you'll be able to log on later today and view all those changes. So let's get into the first one there, which is 2024 SMSF tax changes, or as known on the ATO website, and ATO refers to it as obviously tax time in terms of the group of the changes. So the good news is around the SMSF annual return, not much has actually changed in the actual return itself. There is an additional trust income schedule which we'll cover, which is going to be, I guess, the main change, which is a major change going into this financial year. So what you will see, I guess, is a lot of changes there, and that will apply to all entities. So you'll see changes, if you haven't seen already, changes across all tax returns. So that includes individuals, partnerships, SMSFs, trusts, and companies. So these sort of changes will apply in some description to all tax returns that you do encounter and deal with. Let's go back. So let's jump into Simple Fund 360 and have a look at that now. So come across here into Simple Fund. So as I said, the actual tax return itself hasn't changed and is available, I guess, right now. But a few changes we've made around the application, first of all. Actually, let's go first of all, sorry, into the return itself. So jumping across there to obviously the tax compliance screen. So within the actual annual return itself, as you can see, that in terms of the underlying structure, nothing's changed. But what you will see here is a trust income schedule. So this schedule itself, it needs to be basically prepared for any trust, I guess, structure which pays distributions and which the actual entity receives throughout the financial year. So in this case, any trust income which the SMSF receives during the financial year must have a schedule there attached. So the sort of broad definition that if you're looking at the tax return, it's anything that posts income into gross trust distributions, label M there, will be applied, and that includes obviously unlisted trusts as well. So this will include obviously things like major ones like ETFs, a lot of obviously REITs, etc. on the ASX, listed managed funds, unlisted managed funds, unlisted trusts, private trusts, entity trusts, etc. So it includes a lot. There's nothing that is exempted for that. What you will see there is obviously during the create entries process, Simple Fund 360 will automatically prepare and list each of these for you. If you do go through and click into it, you will see for each schedule there, it is prepared and it's exactly the same as what you see on the annual tax statement that you do receive. So each of these will need to be entered in and obviously provided. We will have some flexibility about adding these in or adding sort of private ones in as you go through. What you'll see is one change we'll see here is across is you are required to enter in either an ABN, ACN, or investor number. The ABN, obviously for things like listed ETFs, so in this case, like the beta shares one that got there, all of the ETFs share the same ABN. So the ATO is allowing that and said it's okay to come through. The investor something could be something like a portfolio number, could be HIN if you want to go down that extent or something like that. It's really just an identifier that is brought through. Not all three, as long as you provide one of these items, it will go through. Obviously, from our investment list, we are saving things on a security level. So if you are entering in something like this, like an ABN or ACN, it is saved, so you're not having to duplicate that fund up to fund. Once you actually enter that there into the system, it will be automatically go through and replicated. So once these, so that you will see these changes come through. We have had confirmation from the ATO that where the SMSF is investing into a wrap or a platform, and you don't physically list all the underlying investments in Simple Fund 360, you just record that as one investment. You can just simply record one line item here in the trust income schedule as well, indicating that's for the entire wrap or platform as well. So the ATO has confirmed with us that that is allowed. So obviously going through, I suppose, working way backwards, what we've also updated are things such as the transaction screen for the additional fields. So what you will see on things like the annual tax statements produced from the fund managers, etc., is there's a lot of these different items which are broken down now. So things up here like under other income and under the capital gains sections, you will see the NCMI and non-SCMI brought there. A lot of the wraps and platforms have implemented these over the last few years, coming through and bringing those across. So you will see all those relevant fields come through, and obviously that should just simply match off the annual tax statement. If you are using obviously the distribution tax automation screen, and you are, for example, using our Smart Docs technology to extract off the annual tax statements PDF and automatically bring through, it will obviously automatically bring that through into the correct location. So you will go through and obviously bring that through accordingly. So just note that that is a slight change going through. Obviously, if there's any mandatory fields that aren't validated, that it will be brought through. A lot of the commentary on the ATO website suggests a lot of their scrutiny would be around private trusts, and I guess closely held trusts. That's their real focus for this, but on a broad spectrum, they have included all trusts, and then obviously in the future will get picked up in terms of their data matching. So, for example, if a trust has declared certain amounts of or tax components on their particular tax return or field, that will obviously be matched then against the receiving entity. So something to be mindful there going into the tax season. Okay, so going across to the next one, obviously with Simple Invest 360, similar changes are made across there into the trust and company tax returns across there. So let's jump across and quickly have a look at that. So first of all, we go in and select a trust here within Simple Fund 360. For anyone who uses other software to administer trusts, obviously it's just for your knowledge, obviously our Simple Invest can obviously manage the trust as well. It uses all the same ledger investment technology as Simple Fund 360. What I'm going to do here is go into the year-end process in terms of period compliance, which is actually going to, I guess, derive the profit for the trust for the financial year, grabbing all the same tax components as we do in Simple Fund 360, and bringing that through to ready to distribute. In this case, it's a discretionary trust, so it's got the beneficiaries. So you're able to distribute based on the amount you request. So I'm just going to go across this. In this particular case, I've got a bucket company here as a beneficiary. In that case, it's again, SimpliInvest will automatically, based on the percentages of whatever I acquire, automatically create, as well as actually receiving amounts. This will automatically create the trust income schedule on this basis, as well as in the beneficiary statements. So let's go through, I suppose going through with that, we'll go through and post and continue. Okay, so a couple of things here. If the beneficiary is a related entity and is within Simple Fund 360, a Simple Fund or Simple Invest 360, so it could even be an SMSF. Obviously, for Simple Invest 360, you are able to post those distributions across from one entity to another, which will automatically go through. So I've gone through and done that. So we'll have a look at that in just a second. Coming across here into the trust income schedule. So a couple of things, as I mentioned before. So let's go across to the beneficiary information. Is very similar, is in the beneficiary section. All the additional fields you'll see added there that you can see that are obviously required, and these will obviously be reported. So it's note that the trust tax returns, that these will be matched into the receiving entity, as mentioned before. And you'll be able to see that the trust income schedule is also attached there for trusts that we do go through. And, from that perspective, it's exactly the same functionality as what I just showed before across there within Simple Fund 360. So note that's going to apply, as mentioned, across all entities. Okay, jumping, the other thing I should mention is, again, going into to the report screen, is any of the actual reports that are produced, for example, statement of distribution and the annual tax statements that's produced as part of the year-end process here within Simple Invest 360, will automatically have those new components there as well. And obviously for things like streaming, that will apply on that basis there as well. Okay, looking across into, again, for companies, for the actual companies, again, same process is being followed. So the thing I wanted to show was obviously that distribution came across there automatically from the trust there into the company. The year-end process will go through a very similar process that you'll be able to go through, post the actual income to the actual ledger that has been received for the year. If there's any actual dividends that you are declaring, you can do that from this basis as well. And obviously it will continue that process, produce the company tax return, and it's the same thing that you'll be able to see the same trust income schedule there for the actual company. And the same basis that if you do have beneficiaries within Simple Fund 360 or Simple Invest 360, which are related or linked to or basically a shareholder, same thing, that the inter-entity process will be used and that will be posted through. Again, just on trust, while we go through that, is we do have the ability now to lodge a family trust election form here directly within Simple Invest 360 as well. So jumping back to the app as we go back. Okay, so you will see there on the period compliance screen, there is the button up top there, which is the family tax election form. Okay, coming to here, you can do one or multiple at the same time, but you will have the ability there to prepare that form, which is obviously declaring that it is a family trust and the income is being distributed, I suppose, to linked family or closely held entities, and you're able to lodge that through directly to the ATO. So gone now is you don't have to prepare that previously there on paper forms, and that'll obviously link through to that section, the relevant section there in the trust tax return as well. Okay, let's jump back there now to reports. Oops, wrong one. So to reports, so a couple of new reports we've added. So I'll cover that second point first of all. So we've added a whole bunch of different end of year updates. So a lot of these are things like the where the notes to the accounts have been updated, trustee declaration, the trustee minutes, etc. Where there's relevant sections that have required update, we've we have updated these, and you will see your templates updated. So the only thing to be mindful of on that basis is where you are using a custom template. So let's go across here to the fund. So let's grab we'll go across into letters and minutes. So where you are utilizing a custom minute or letter, or let's say the trustee declaration. So what happens in this case, if you are using custom one, it's saved to the badge. We don't, when BGL updates these, we don't override your template at all. So going through and looking at that, you will need to, I'm sorry, wrong button. You will need to go into the template and actually update it either yourself, or you do have the ability to reset that to the default template and edit the default template accordingly. So the list of reports and things that have changed are available there on the new features list. I'll jump across to this one. So the new report we've added is the fund snapshot report. So you'll find that there obviously under WorkPay reports, or you can just search for it as I have there. So generating that particular report, as the name suggests, this will provide a snapshot of the financial year. So you can see there's an overview there of the tax for the financial year, investment income that has been received, returns on investments based on the investment categories, on that sort of investment level, what the current investment allocation is, member balances. It will display contributions and pension payments there as well. So it's just a nice little snapshot cover that has been received there. You do also have, for those that aren't familiar with as well, if I find, you do have a, try to find this one, fact finder there as well. So with the fact finder reports, very similar, that will display on a high level, I guess, an overview of the fund in terms of contributions, pensions, what accounts are available, etc. And then it shows obviously opportunities that are available without actually obviously providing any recommendations. So it's again a nice little snapshot of the financial year, especially those approaching retirement or moving from accumulation phase into retirement phase. The other one we've added is for companies, is we've added a new franking account worksheet. So I don't think I've paid any dividends for this one. No, so it's going to error out. That worksheet for that particular one will obviously display the relevant information that you see on screen in terms of the company's franking account. So that'll be a detailed worksheet, and you'll have the ability to export that out to Excel as well. So property dashboard. So what we've added here is quite a few more providers, I should say. So under the investment screen, investment menu, I should say, you can move across there to the property dashboard. Okay, so with the property dashboard, you'll have here the option there for external service providers. So there's, I think, Option is the new provider we've added there in terms of valuation providers. So we've actually added quite a lot there. So across those, I suppose, you know, CoreLogic used to be the only provider we had on that list. And feedback we've had from a lot of firms is CoreLogic's really dropped its standard over the past sort of 2 or 3 years. So that's the reason we've added the ability there to connect to other providers or suggest other providers. So most of the other providers, apart from Property Pricer, I should mention, provide a lot of either residential, non-residential, and rural valuations. Property Pricer specializes in just residential valuations there. They all have different methods, different pros and cons, which we don't provide a comparison for, but you can just assess yourself. If you click on the connect button, so I'll go over this one for the opt-in, it'll connect you through to their websites, where you're able to either request quotes or put the relevant information, or some will have the pricing, which is available there on their particular websites. So a reminder to go through and obviously have a look at those. We also added, in terms of loan providers, obviously a connection through there to Mortgage Advice Bureau, which does provide SMSF and other investment loans, as we in terms of comparison or providing quotes for those in terms of serviceability. The other reminder on that is in March this year, the ATO put out an alert around valuing fund assets and especially focused around properties there. So you can see there that the high risk there, so highlighting that section there, you can see the ATOs highlighted there were 16,500 funds, which had certain classes of assets and they had the same valuation for at least 3 income years. So Aaron, I think you've just popped online. I think you want to add to that. So
yeah, I think it's a really important thing to note, and I might have highlighted it previously as well, but this is where the ATO is using a lot more of the information within the SMSF annual return to look at aspects of the compliance requirements that sit within the audit. So this is specifically looking at Reg 8.02B, which requires us to value assets to their market each and every year. Now, that doesn't mean necessarily that you have to go through the process of getting the valuation done each and every year, but you have to be able to substantiate the position of that particular asset. And not only do we have 16,500 funds, and I guess the best reference point I can give to this is like when the ATO wrote to those that had an LRBA with at least 90% asset concentration as well. So they're using information within the SMSF annual return, and they've said we identified 3 years in a row where the valuation was effectively the same within that particular label. So that's not to say that it was incorrect, but there was effectively a please explain that has come along with that. And linked to those 16,500 funds is 1,000 or more than 1,000 auditors that they've also had the explanation that says under the compliance part of the audit, you have an obligation to ensure that 8.02B has been satisfied, and we have some concerns around the fact that that valuation may not be reflective of its current value. Why is all this important? Well, it's important because of things like the general transfer balance cap, which enables people to be able to make contributions, the transfer balance cap for the amount that can go into retirement phase, potentially our Division 296 tax laws, et cetera, et cetera.
Cool. Thank you. So there's a couple of questions that popped up there that around obviously just going back to the trust income schedule. So just to clarify, that trust income schedule, you hopefully won't need to modify it. Screen. You will hopefully not need to modify it all. So your normal data entry process is the same. So you'll be still entering in trust components on either the actual transaction screen or on the distribution tax automation screen. So be using one of those two to enter in your tax components. The key difference is that now reporting to the ATO are the underlying tax components for each individual investment, where previously that was done on a whole of SMSF or whole of trust or whole of company basis. So that's the real key difference there. This is just a reporting mechanism through to the ATO. And as I mentioned about data matching, there'll be data matching between the receiving entity and the sending entity to make sure that that matches at some stage in the future. So it's important to obviously get that correctly. Jumping back. Cool. So documents. So we've got a couple of different things here in the document screen. There's the ability there to split documents, and there's also UI changes we've made to the document screen. So jumping across there to Simple Fund 360. Let's go to the document screen. So under reports documents. Okay, so first of all is in terms of some UI changes. So we've made some, I suppose, slides or subtle changes there that do go through. But what you will see is, I suppose, a couple of things is you will have where we've got the folder structure here on the left-hand side. I guess that is designed so you can drag and drop documents to the left-hand side, so across automatically there into a chart. And where you do utilize that, that will be automatically included in things such as the work papers within Simple Fund 360. If you don't utilize that and it's taking up too much real estate, you can now drag that across and I suppose utilize your full screen as you do go through. What we've done is cleaned up a lot of the UI display of a lot of the filters. So you'll be able to see that rather than displaying up top and dragging it through, you'll be able to see all filters and you are able to just go through and filter and sort of, I guess, search across those filters and not just the documents at that point in time there. So a couple of little changes we've made across that basis. The other one we've done is you are able to, when you do open up documents, and let's say you were filtering, you do have the ability there to move across the document. So you can see them, I'm clicking there on the top right-hand side and bringing those across there accordingly. So you do have those as you do bring through. The other one we've added is the ability to split files. So this is where, let's say, for example, a client has sent you the source documents for the entire financial year. You've scanned those into your scanner and brought those through, or vice versa. You've received via email one document, one file, one document that's it's got multiple documents. So you can now upload that into Simple Fund 360. So I've got an example here that I've brought through. So this particular one here has got a couple of different invoices, got a dividend statement, as you can see there. It's got a rental statement, dividend statement, etc. So you will see, obviously, that's multiple documents. So on the top left-hand corner here, you will see the option now, and this will apply to all documents that have got more than one page, the ability to split documents. So you can see, okay, I'll choose there to split. So there's a couple of things here is that we then try and work out ourselves, or the system will work out, okay, how should that document be split? And do any of those documents suit a particular model there? So you can see there automatically it's gone through and provided the relevant number ranges going through. And this one's quite basic that I've done, that there's no multi-page documents. So it's probably not as complex as what others might be. But you do have the ability there to still scan through that document there on the left-hand side, make sure the ranges are correct, and actually then go through and make sure that has taken place accordingly. And then if that is correct, you can obviously add a new range and modify that and change things, change the names if you need to. As you do go through and provide that, you do have the ability there to split the document. And as the name suggests, it'll break down based on those particular ranges. Each of those documents, as they're recorded, then obviously the relevant Smart Docs model is applied, and that'll either do things like attach to transactions, attach to the relevant work papers, be used there for smart matching, be used on the automatic tax automation screen there as well. And before I finish up there, I think there was a couple of questions there about, I touched on the distribution tax automation screen. So maybe if I just really go, mark was incomplete. So there's a question there about what was I talking about in terms of Smart Docs. So if a document's already uploaded, or you can go for one of the items, if you could scroll across here on the right-hand side, you can upload a tax statement there automatically to that relevant investment. Or you can actually find one of your existing documents from the document screen and attach it using that review button. Once that's been done, you do have the ability to select that investment and extract from PDF. And what Simple Fund 360 and Simple Invest 360 will do is automatically read the relevant fields there on the tax statement, obviously apply them to the relevant fields. And obviously for 2024, that'll include the new forms there. And you'll have that ability there to go through and actually adjust that if it has got it wrong for some reason. We find the majority of them are correct. I think the only ones to kind of watch are where for some of the ETFs where they send multiple investments in the one document, that sometimes you just want to be mindful and making sure the AI is getting that right. And that can be automatically then posted as a transaction, which will then, in this case, I'll generate and paste a transaction. It'll automatically post that into the transaction screen. Okay, so you can see here, it's a $0 journal, and it'll post all the relevant components there automatically for you. And on top of that, it'll automatically, obviously, attach the document there, and it's used in screens such as work papers there automatically. Okay, jumping across into, I suppose that's everything I want to cover for today. So I'll come back to the Q&A after, but coming soon. So we're teams actively working there on open banking. So I explained a bit about that last time, but I'll go through a detailed demo and explain a bit more in the next webinar that we do, but obviously this will allow BGL to receive data feeds from every single bank in Australia. But there is a different authorization process that it is done online. For those that use DocuSign, we have enabled now, or we will be enabling the in-person digital signing function. So it does seem a bit counterproductive, but allows you to keep documents digital while still having a client in the office for a client meeting, and obviously signing on something like a iPad, etc. as well. So we'll go through it and look at that. On our report screen, the 2024 audit work papers will be updated. So for those that provide that to auditors or auditors that do utilize that. And the corporate actions for the relevant ones will support, especially for things like DRPs, will support donations where the residual amounts are sent off and obviously donated to a charity. That's everything I'll cover in my section, so I'll just pass over to Aaron.
Cool. I think we're good to go, Jeevan. So thank you. All right. So as I'd indicated earlier, I wanted to just give an update on what's been happening from a legislative point, because we did have a couple of weeks of sitting before the end of the financial year that does have some implications around our superannuation funds. So the first one here, kind of nothing, no stories to sort of tell. The legislating the objective of super. It's been something that's been going on for quite a period of time, unsuccessful in 2016. The longer this is going on, the more likely it's not going to sort of fly here. But ultimately, the government's trying to put in place an objective of super as a framework to, in essence, provide policy going forward. And as I've said, announced in February last year, and really hasn't advanced any further. A lot of it, interestingly, seemed to be the justification for the next topic that I'm talking about, which is the most controversial around Division 296. And we are now within 12 months, effectively, of when these laws were intending on starting. And the reality is we are no further to getting this resolved than where we have been in the past 6 or so months. Most importantly, though, out of all of this, is that we are getting more closer to the government having to reconsider the form in which these rules operate. So we have our Treasury Laws Amendment Bill, so our better targeted superannuation concessions. What's important to note there is that we have seen it go through the House of Representatives already. We did see it go into the Senate and a Senate inquiry be undertaken where there was an opportunity to raise all the concerns around the fact that there's a taxing on unrealised gains, which is naturally quite unique to Australia's tax system and that globally as well, lack of indexation. Effectively, that report, whilst there were dissenting views in respect to some of those things, ultimately went through and went back to the House of Representatives. So in the 2 sitting weeks, one before 30 June and then in the first week of July, on both Thursdays, we were meant to see that bill getting reintroduced into the House, well, effectively have the third and final reading decided in respect to that particular bill, and then go back up into the Senate to see whether it would get finalised or not. What has become quite interesting is that that has now been twice removed from the parliamentary sitting. And a lot of that stems to the fact that the industry, and in particular the SMSF Association, has been able to successfully have conversations with some of those crossbench senators. So we now have people like Senator Pocock and a couple of those independents now open to the conversation and, more importantly, understanding the implications of what that unrealised capital gain actually looks like, and therefore in support of the views that the association have, which are, it's not right that that should be the approach to take. Now, inside of all that, we've then naturally had one of Labor's numbers in the Senate defect to an independent. So Senator Fatima, can't remember her surname off the top of my head right now, but so we've now got an additional independent here that probably doesn't really understand the implications and hasn't really needed to understand the implications of what these measures were all about. So we now have a period of time for winter where Parliament is effectively closed, and we won't get anything further until we get to August. And really what the industry, so the SMSF Association in particular, is going back to now is saying we need to change it to an actual earnings calculation. So we're not going to see this tax get withdrawn, but let's apply a tax rate on actual earnings that are going to happen. And if you can't use actual earnings as a calculation, which we know in APRA land is somewhat problematic because of the systems, something like BGL Simple Fund 360 is going to have no problems at all being able to determine that, because that sits within the construct of our SMSF annual return. So if we can't use an actual earnings calculation, then we should go back to an alternate formula, and that alternate formula will be most likely done on an earnings calculation, a notional earnings calculation that applies similarly to excess contributions. So that's where it currently sits. Naturally, there's going to be more conversations with crossbench senators, in particular the WA senator, to flag these things further. But it is starting to get a little bit wobbly for the Labor government, and it is all about getting the numbers that they need. The Greens, they appear to have support. The Greens were trying to needle in on a couple of extra things off the back of that final Senate report. But effectively, they got what they wanted, which was about superannuation on paid parental leave. But we will naturally keep you up to date with what's happening around those measures, but we are making some progress. And the other part, or the final part on the legislative front, was around the changes to our non-arm's length income provisions, and specifically around non-arm's length expenses. Now, this was going backwards and forwards in Parliament as well. It was linked to the same bill for those accountants out there that were waiting on the instant asset write-off, and there was a debate around the $20,000 or $30,000. Well, the non-arm's length expenditure rules were part of that particular bill. So that has now gone through. It went through and assented to an act on the 28th of June, with its effective date being from the 1st of July 2024. Now, the most important thing here to understand is we have a whole range of dates that we need to be quite cognizant of. So we got it finalised. It took effect from July 24, but it applies retrospectively back to 1 July 2018, when the amendments around those non-arm's length income rules were introduced. But in addition to that backdating of that information around the general expenses, we then have our ATO compliance relief that took us through to the 30th of June 2023, where we had those non-commercial arrangements in place around general expenses. And what I mean by general expenses, and you can go back and watch webinars that we've done probably earlier this year or late last year, Jeevan, I can't remember. But ultimately, we're looking at things like accounting fees or financial advisor fees, things that are connected to all of the fund's income that are effectively undertaken on non-commercial terms. So you're doing the accounts of your SMSF and not charging a fee. A staff member might be doing it. You're using Simple Fund 360 to do that work. And therefore, if you're charging the public at large for that work, and there is an amount that would have been charged at $3,000 or $4,000, then a 2 times multiple would be applied to that difference between those two, and therefore that amount would be taxed as non-arm's length income for that particular income year. So $8,000 off a $4,000 amount multiplied by 45%. So there are some things that can be done in respect to these laws that are now in play. One of those is that you charge a commercial fee, or 2 may be that you have a policy in place inside your firm around the provision of those services, and that it is applied uniformly to all team members, all partners, or all staff, however that is framed. But you need to have that policy in place to avoid the implications of these measures, or otherwise, quite simply, you do these in your capacity as the trustee of the fund, as opposed to in your individual capacity, which is all about the definition that sits within Section 17B of the SIS Act. So they're the main things that have been going on in the industry, just to be aware of from a legislative standpoint. The other thing that's worth noting here is that we have had some changes naturally to our Assic fees. So our Assic fee for company and corporations has jumped up around $21, I should say, for the year. So just note that that increase has occurred there. These are linked to CPI ordinarily. And then we have our ongoing fees on an annual basis in respect to ordinary companies, so proprietary companies that are not special purpose. And then our special purpose fee is $65 there, increase from 63. The other thing to note is you always do have that opportunity with your clients to pay in advance. So that 10-year review fee, so rather than $65 a year, you can pay in essence now $452 that provides a 30% or more benefit in paying that up front. Now, naturally, you want to manage the lifespan of that SMSF, but again, just be aware that that is actually available for your SMSF clients if they want to do so. And the final thing is just noting that the late fees in respect to lodgements, they increase from $93 up to $96. So again, just a number of those changes that impact companies that are in many instances linked to your SMSF clients as well. A couple of things just worth noting from our document side. We have made a number of amendments to the deed around Smarter SMSF deeds. So there's some layout changes you'll see for those that order, whether it's on our own platform or through Simple Funds 360 to get those companies. We've introduced some changes in our Rule 27 around dispute resolution and the introduction of some mediation through the Australian Mediators Association. So kind of introducing some steps to be able to work through to try and mediate certain disputes. We've made some updates around our death benefit nomination forms, just providing more scope around how the number of nominees and the percentages and allocations of those can be incorporated. And then naturally, all the PDS changes that need to occur each and every year to reflect the new financial year 2024 to 2025 and so forth as well. So we have a new governing rules version, 2407 there you can see, and naturally that applies to deed upgrades and lost deeds and that sort of stuff as well. In addition, we've had some LRBA updates. A lot of this, we're seeing more questions and stuff being asked around either going into arrangements, but also as we're getting more clients looking to pay out these arrangements as well. We have seen the safe harbour increase in terms of the interest rate went up 0.5%. So for real property, that's grown from 8.85 to 9.35 and up to 11.35% for listed shares and listed units. So all of that stuff naturally impacts the variation that you need to do with your clients to ensure that they continue to comply with the safe harbour and therefore don't taint the position of that fund with the non-arm's length income tax rate. The other ones is our pension documents. Again, we've had a PDS update from the changes from the 1st of July 2024. Most importantly here, I think the fact that our reference point of what was preservation age to age 60 now disappears because preservation is now 60 years of age and older. So there's no need to reference that sort of interim age, which therefore means the low rate cap is ultimately removed from the tax rules as well. And the other thing that we've recently added with our pensions is the new ability to choose whether the commutation or rollback is effectively as a result of a member request or where the pension standards have been failed. And one of these one of the things that we've seen in the last week or so is the ATO has actually finalised the updated version of the tax ruling 2013/5. And one of the things that they make very clear in that ruling for the first time is the difference between what they perceive to be cessation for income tax purposes. So if you don't meet your minimum pension, then the presumption is you no longer have an income stream for tax, and therefore any payments that have been withdrawn for that year are lump sums and you're not entitled to your ECPI. Now, the question for superannuation law purposes and trust law was whether that pension contract that you have ultimately continues. Now, that can be the case, but the ATO says is until you actually formally commute that income stream, the fund will not be entitled to any further income tax exemption in subsequent years. So again, what we've introduced into these documents is the fact that the commutation will occur as a result of the failed pension standard, and therefore in the subsequent year, you would need to start a brand new pension in respect to that particular client and that income year, and noting that it counts for an ABP, TRIS, and TRIS in retirement phase, also noting that TRIS is a much greater problem because you'd be accessing preserved benefits, noting that that failure can occur both in the context of minimum pensions, but also failed in the context of exceeding the maximum pension for the year. So again, just a few things that we've seen recently around the finalisation of that ruling as well. And the last thing, we've been adding some updates to our legal disclaimers around the fact that we've also got our Smarter Legal Review available for a range of documents as well, and just, again, some clarity around those sorts of things. And on the topic of some of that legal work, we are running a Smarter Legal Week. So the opportunity for you to understand a bit more about the Smarter SMSFD, the changes we're making, the legal review that we have, how you can create powers of attorneys for your SMSF, enduring powers of attorneys for your clients, and much more as well. So that's in the last week, and you can find out more by visiting our events page. So Jeeves, that covers me. I will hand back to you.
Thank you. So I clicked unmute and I also progressed the slide. But yeah, from a BGO perspective, we're also running our RegTech Roadshow around the country on those particular dates. So Smarter SMSF is a sponsor and part of that as well.
Yep.
So, visit our website, which is bglregtech.com for further details. That's across, I think we're going to 6 capital cities for this. And an agenda, the dates and everything is available there, and it is a free registration for that particular event.
Yep.
So like always, Aaron, thank you for your time.
Pleasure. Thank you.
So a link to the recording will be sent to everyone. If you have any follow-up questions, just either email the address online, or you can contact Aaron or myself directly. So thank you, and we'll see you all next time.
Excellent. Thanks, everyone. Bye for now.